Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Rosser with Victory Fiduciary Consulting, and today is we're into the second week of July. We are heading into earnings season for the stock market. And one of the things that I've been hearing a lot as I've been doing my research is this idea of, are we in a V-shaped recovery or are we in a W? And so, obviously the big news is obviously COVID and kind of the chaos that it is continuing to have on the market, on the economy, on the country itself. And so it's like the bulls and bears continue to kind of battle this out every day. We've really noticed that over the last week, returns have been somewhat muted. I think that the market has been somewhat cautious over these last few days, kind of trying to determine what impact COVID is going to have on the recovery, on the economy. And so on Friday, we had our big jobs report that came in, and jobs are better than expected. Unemployment is estimated to have fallen to about 11.1%. So while we're still at all-time highs, still better than what we had expected at the 13%. And so now those numbers only went through the middle of June. And so those numbers would not include any job losses that occurred in those last 2 weeks of June that may have happened as a result of states needing to kind of back down some of their reopenings as a result of rising COVID cases. So it'll be interesting to see what happens, especially this month, as we know what we're seeing right now with COVID, because remember, the market doesn't care about the virus itself. What the market cares about is what's the impact going to be on our recovery and on the country's ability to continue to open up the economy. And so, what we're seeing right now is the news is fairly dim right now with Corona. I just saw that 56 hospitals in Florida are now at capacity. We just had 60,000 new cases reported yesterday. Today we hit 3 million COVID cases in the United States alone. And so these are all, a little grim when we think about at what point is the country going to have to take a pause and say we need to regroup, because again, the big concern is that we don't overwhelm the healthcare system, that we can continue to treat patients and that our ICUs have beds and that we have enough ventilators. These are the things that are concerns for what would make the economy kind of be tripped up. I've said before that we've priced in a perfect V-shaped recovery, no room for disappointment. And so for sure, having to stop the reopening, pause the reopening, backtrack the reopening was not part of what the market priced in. And so, we'll just have to see. We don't have a crystal ball. So all we can do is look at our indicators, at our math and our rules, and then make decisions based upon them. And so, but these are just things that we're looking at that may or may not wind up driving the market. And so, I think it's notable. I wanted to spend a couple of minutes today and just really talk about what actually drives market prices, because I think that there's a lot of confusion out there about, what actually makes prices in the market rise and fall. And it's actually a pretty simple explanation. Everything's driven by supply and demand. That's it. So if we have more buyers for a stock, then prices will rise. And if we have more sellers than buyers for a stock, prices will fall. And so the stock market is really just a place to introduce buyers and sellers. And so there's always sellers that are looking to have their stock shares purchased, and there's buyers who come and looking to purchase those stocks, and it's determining, are they willing to pay for the price that it's being offered by? And if people stop buying shares of stocks, or they start to say, no, I won't buy at that price, in order to continue to sell, then prices will have to fall. And so supply and demand, just as supply and demand works in our regular everyday economy, it's the exact same thing as the market. And so that's really what the market is designed to do, is to allow people to come together. And so point and figure charting is one of the charts that we use to be able to track supply and demand in the market. And so I would talk about supply and demand in the market, that it's kind of like when you throw a tennis ball up in the air. So you throw the tennis ball up in the air, and so this would be demand pulling the ball up higher until it hits resistance, and then it falls back to the ground, okay? And so what we see is that over time, you can actually track this supply and demand kind of tug of war back and forth over time through charts. And eventually what you'll see is that either that tennis ball will begin to rise higher and fall lower, or eventually it'll become harder to throw that tennis ball up any higher, and it will begin to fall, and it'll actually fall lower than where it was before. And so it's the same idea that we can track this with charting. And so we actually just chart X's and O's, and just to keep things very simplistic, the way that it works is that we don't care about what happens day to day. We only care when there are significant increases or decreases. And so depending upon our box size, so right now the S&P 500 is in a column of O's. So prices have actually been falling some. So in order for us to get another zero, price of the S&P 500 has to move from 3160 down to 3150. We would get another O. Or for us to reverse columns and to go back into X's, we would actually have to go up 3 boxes, and the S&P would have to close above 3180. And that's it. And the reason why we chart that way is that it kind of keeps the noise out. So we don't care day to day if there's, you know, a little bit of an up day or a little bit of a down day. We're looking at trends. And so we're able to kind of see, are the movements in the market enough to cause us to take action? And so that's it. We chart X's and O's. Now, we don't chart them every day. It may take 3 months for us to get to a point that either causes a reversal and needing to go up, or to add another X or O to the column. But what it does is it allows us to see this tug of war of the tennis ball going up or down. And what's taking over? Is supply taking over, meaning that now prices are beginning to fall. People are willing to pay less than what they were willing to pay before. Or is demand in control, meaning that prices are probably going to be pushed higher. And so this is one of the charts that we use to determine supply and demand in the market and what's driving prices. You know, I talk a lot about the fact that the market's actually pretty similar to your produce market. And the reason for that is, just like your produce market has certain vegetables and fruits that will be in season that are better during some parts of the year than others, the same goes for the market, that there's always going to be areas of the market that are in favor and out of favor. And so you don't necessarily want to be invested in an area that's out of favor for that time. Rather, you want to be looking for the areas that are begin to move into favor. You don't want to get them when they're completely ripe and about to spoil, but you also, so you're looking for them kind of early on as their trends begin to change. Just like most people are probably not going out and buying corn on the cob in December in New Jersey, right? We're from the East Coast here, and so that's kind of a summertime vegetable that we look for. There's certain fruits and vegetables that are in season, and then they also move out of season. And the same happens with the market. And so what we want to find is the areas of relative strength that are in favor, because we're just trying to stack the odds in our favor. So we don't have a crystal ball necessarily. We just know that if we can tell the areas that are trending upwards and have positive relative strength, these are areas that will be more in favor versus others. So another area that we look at a lot is dynamic asset level investing, or DALI. And so what DALI does is it takes 1,100 different stock positions, and they arm wrestle it out every day. And so every day there will be winners and there will be losers, and then they are charted accordingly here. And so I use the example that looking at dynamic asset level investing is kind of like charting out your favorite sports teams. So early on in the season, it may be kind of difficult to know who's going to be in the top 3 and who's going to be in the bottom. But as they continue to play out those matches, every day there begins a track record. The teams who are consistently winning every game are moved to the top. The teams that are consistently losing are moved to the bottom. So the same thing happens here. Every day, these different areas of the market, they battle it out. And then we can see the winners versus the losers. And so this is DALI's chart as of today. And so as of today, we can see that cash still remains number 1, which is it's very rare for that to happen, for cash to overtake equity positions. And so cash is number 1, fixed income is number 2. So DALI is saying, looking at all positions of the market, winners versus losers, our best opportunity is in cash, number 2 is in fixed income, and then number 3 would be in domestic equities. So our losers, so the areas or the sports teams that are losing right now would be commodities and international equities. And so it's kind of like an easy snapshot for us to take a look and say, in the market, where's our best area of opportunity? And again, not having a crystal ball, and there's always going to be upsets. So just like when your team has an upset, there can be upsets within the market, but generally speaking, we want to try to stack the odds in our favor. And so that's kind of how it works. So, in the market right now, it is such a crazy time. There's a lot of uncertainty that kind of still remains. We're still heading into earnings seasons. There's still a lot of questions about whether we're in the first wave or second wave of COVID, just what that impact is going to have on, our economy. And there's a lot of questions with the election. And so these are the areas that, as we watch, that we're thankful to have a program, though, that's math and rules based to kind of guide our hands and say, this is the area that stacks the odds in your favor, because we want to be trying to find those areas that are going to give us the greatest potential. So I just wanted to spend a couple minutes with you, kind of talk about our process, what our line of thinking is. I'd love to hear your feedback on this video series so far. I welcome any questions that you have that I can address each week. You can email them to me at ashleyer@victoryfiduciary.com. I'd love to hear from you. Otherwise, next week's video is going to be pretty short. I'm going away on vacation, so I'm going to go ahead and record that ahead of time. But I will have something out there for you. So again, I hope you and your family stays well. Thank you so much for joining us, and we'll see you next time. Take care.